going to study another type of costing method. It's called the process costing. In terms of reading, Chapter 5 of Jury's book is quite good, has got a lot of information as well as some of interesting exercises, but some exercises can be quite advanced. So look into the basic exam exercises questions at the beginning, and when we study slightly more, then you can start to look into the advanced one. In terms of the key learning outcome, today we are looking into what this process cost system is about, and also why it's important, what the purpose is using this method, how this method different from some other method, some of the key elements when looking at process costing. For example, when we are doing process costing, then people need to look at some losses in the process. Some are normal losses, like evaporation of the material or wearing out of the machine, etc. But some are abnormal losses that, or such as defect, etc. Those should be able to be reduced if quality management could follow very well. So we look into this, but these losses need to be taken into consideration when doing the process costing, and also explain and calculate value equivalent unit, and explain how joint and the byproduct are treated in the process costing. So that's the learning outcome. So overall, process costing is employed in a lot of manufacturing business operations. So, for example, making on a conveyor belt, making juice or making crisps, food related, or oil refinery. So process is almost non-stopping exercises for those businesses. If they have orders, they will continue to produce this thing in very large quantity continuously. And each stopping and restarting will cost them a significant amount of money. So in the oil refinery, the oil will continuously pump in. And in steel, sugar, or chemical manufacturers, those things will be continuously made. So that's a process. It's very much different from a job costing or job manufacturing. So in a job manufacturing, many things are not the same. For example, here you can take a look at the differences. In a job manufacturing, things are made on an individual basis. So if it is making a machine or a computer, these are all individual items. They could be continuously made, but sometimes when order comes, they might make a batch. And then when there's no order, they might stop a little bit. And the cost associated with batch or job costing is not as significant as process costing. So process costing in many situations just couldn't stop, basically. And costing are not the same. So for job costing, they needed to be quite distinct, each item different from each other, and they are identifiable. When it comes to process costing, it's very hard to identify different drinks, different bottles of drinks. They're all quite similar. Or chemical processing, they're all similar. The things adding to the cost, maybe packaging or some maintenance related actual services. So these are some of the key differences. So the main differences between the process costing and job costing is the extent of averaging used. Is the extent of averaging used. Job consume different quantities of production resources, and process consumes production resources continuously. So just to summarize the key features of the process manufacturing. So the key features of processing and the processing manufacturing and associated costing is an important product costing method for mostly manufacturing companies and mostly associated with mass production in very large volume. And all the products produced are the same. The outputs are the same. Also, process costing is widely used in some special industries. I mentioned oil refinery, food production, sometimes used in textile industry, paint factories. So when products are produced identically and in very large quantity. So one of the distinguishing feature of process costing is that all the products in a process are identical and indistinguishable. So for this reason, an average cost per unit is calculated normally. So it's very difficult to item by item cost understand the cost. But if you have a overall output and you have a number of the output, then it's quite simple to just produce an average, and that could be a representation of the cost per unit. Another main feature of process costing is that the output of one process, it could be different from the next process. So sometimes the items, the produce, they will go into a couple of processes. So for example, if it's a cake factory making cakes, then they could continuously making cakes, but the cake would go through a couple of processes. So maybe the first is the base of the cake, and then move into the second process. That would be some topping, and then move to the third process, maybe some fruits put on top of it. So each product would go through a process, but there are a couple of stages on this production process, and different costs would be associated with different stages. Also, where there is a closing work in progress, which is called WIP, at the end of one period. This forms the opening WIP at the beginning of the next period. So there is a complication in calculating process-based costs, including, I mentioned, losses. So it's quite easy to just go to calculate an average unit using the total output and the total quantity, but and get the average. But the complication is in the process there are some losses, and also in the process there can be something are in progress. So when something are in progress, they can be used for the next batch, and they can coming from the last batch. Then that calculation need to take into account exactly how much production is being produced in this batch, which is taking into account from the one WIP coming from last batch and taking out something that going to be used for the next batch. So just to illustrate, for direct job-based, it would be relates to direct materials, direct labor, and the manufacturing overhead, which we have studied and quite straightforward. And for the work in progress one, you got something direct material and direct labor similarly with the job batch. And when work in progress are finished, they become a finished good. So similar to the job batch, they will become the cost of goods sold. However, in the process production, there'll be something relates to the whole process, and direct labor and direct material could be associated with different processes, so different stages, and then they will be, so they are differentiated by different stages of the process instead of differentiated by different product. Here is a list of examples. Can you have a quick look at what do you think the process, the production is a process-based or a job-based? So for the first one, job costing and the process costing track cost differently. Would the following companies use job order costing or process costing? So a manufacturer of refrigerators.
I think it's a job manufacturer.
Yeah, it should be a job because it's a unit and each one needed to be made on its production. So there are quite a lot of components need to be assembled. What about the second one?
I think this one's a product manufacturer, right? Because it's a specialty like with it, so it wouldn't be like mass production.
This can be mass production because they are quite identical. If you are making them, they are really quite identical. You can't tell which one is which, and then can be produced in a whole process. So that's one can be counted as a process. What about luxury yachts? So for this one, Haya, what do you think? That surely this is quite clear.
Luxury yachts. I think it's also a job manufacture, right?
No, this one would be this one would be definitely a job because each yacht, they're not the same. They take ages, probably take a few months to make just one, and they are based on orders. Can be customized, so they wouldn't be the same, not in large quantity for sure. What about professional service firm? So this one should be a job based as well. Okay. So in this is a service product. So service product normally they can't be exactly the same. Each individual customer would not be the same, and then sometimes need to be quite customer focused, focusing on different people's specific need. Okay, so professional service, for example, dental service or accounting service or solicitors, these are not the same. Landscape contractors, that could be a job. Customer home builder, a job. A cell phone manufacturer,
I think that one's also job.
that could be arguable. My cell phone can be quite tiny, and they are quite identical actually. They're quite tiny and identical. We just say they could be a process based. Okay, if it's highly complex or changing colors or something, they can be slightly different. What about the frozen pizzas?
Those are production, like P, not job,
They're
because they're identical, yeah.
Yeah, they're very identical. There are a few processes with this kind of production. For example, I saw the TV program called how these things are made. So including some pizzas or cakes, etc., or chips.
Yeah, I've watched that show.
You watch as well. I watched the pizza actually, which is quite good. But then they just mass manufacturing actually. Looks quite nice. So if you get to the supermarkets here in the UK, quite a lot of the pizzas are actually made in Italy. So anyway, this is process based. So manufacturing of multivitamins, you say is a P as well. Okay, just So finally, tennis shoes. Tennis shoes is quite
that was like, I think that they say it in styles, but it's still mass produced. So I think maybe a P as well.
a P, yeah, very much a P. Unless it's like a designer shoes or something like Nike, you have a small batch and very customized. Otherwise, they would be very fast based. Okay, so these are just some example. So in terms of process costing, then as the term implies, it's very important to distinguish the average cost of different items because it's really significantly mass produced. So there is a general steps framework that can help to understand how to do process costing. So at the beginning, basically, it's important to determine the normal losses in the unit. So for mass production, if there's no losses, that would be quite good. But as I mentioned, if it's, for example, making crisps, something might fall off from the conveyor bag or some broken. So if crisps are quite small, tiny, they will be sifted out, like could become defect. Then they will not go to the production and counting as units. So some materials would lose in the drink manufacturing, and some of the water might disappear or the juice materials might evaporate. So there's some losses. Okay, those need to be identified. Calculate the expected output. So in the juice manufacture, if for a certain period of time, then the total output could be calculated. So from beginning to the end, the total output for that period of time is relatively possible to be estimated. And then when this number is obtained, looking into the other costs, including material cost, like the ingredients, and labor costs, including the people working in the factory, and some of the overheads. So these costs, together with the losses, are identified. And the basic calculation is to calculate the cost per unit. So if expected output is calculated, then the average of the output cost per output, then could be obtained. To be able to cost the output, we would like to see what are the different types of losses could be involved. In the manufacturing cases, there are many different types of losses. So some are quite certain. Then because they do the manufacture all the time, so they have a different calculation and some quite scheduled understanding about what kind of losses could happen. So one of the losses is called the formal losses, normal losses. So this is a loss that is normally expected, and then manufacturers know that would happen and would take sometimes with good estimation. For example, if the factory produces the same thing repeatedly, day in, day out, they would know, for example, maybe 50%. That's quite high, but if it's food related, maybe quite low, like 10 or 20%. But this could be relatively controlled. If they feel this is quite high, then they have to develop some technology to make sure that normal losses could be reduced. So normal losses increases the cost of the expected output if the loss cannot be covered, if the item could not be sold. And next one, expected output. Expected output basically is the normal output minus the normal losses. So this is quite straightforward. So if the total output is 200 items, less losses, maybe 2 items being lost, then expected output would be 200 minus the 20. Not only the losses could be normal, sometimes there are abnormal losses. These losses are quite unexpected, actually. This is where actual output is less than expected output. That usually occur due to some poor working practice, like a poor handling of the materials or machine breaking down, or the laborers working in the factory are experienced and causing some of the problems. So remember earlier mentioned that there are some textile factories doing mass production like this, like printing, for example, printing the fabric or weaving the fabric, making, if the person is very experienced, then they can make sure that the expected output is almost similar to the actual output. There are not much differences between the two, means not much loss other than the formal loss. But if someone are new, then they might produce unexpected loss that could be counted as abnormal losses. This the value is the same as the good output and the taken as an expense in the profit and loss account in this case. So basically, two bigger categories of losses. Normal losses, the cost of losses in the production is expected, okay, and could be absorbed by the production effectively. But abnormal losses is treated as a separate kind of loss and would be put in the profit and loss account as an expense. So they are treated slightly differently, and then the purposes of those different losses occurring are not the same. So understanding and accurately recording and reflecting those different losses are quite important in cost management, and would provide the managers and decision makers a very clear picture what are exactly happening in the shop floor in the manufacturing process. And then there's also possibility that there are some abnormal gains actually. So abnormal gains is unexpected. So it's different from normal gains. It's unexpected. They normally occur when the actual loss is less than the estimated normal loss. So, for example, some people estimate the loss would be 200. In the real situation, the loss is only 100. Then it's not particularly a profit directly, but it can count it as an unexpected gain. These gains arise when the efficiency of the production process is better, or the higher than anticipated, or when the actual wastage or defect rates or the shrinkage of the materials is lower than expected. So this could happen. For example, if I give you an example, for example, if in a drink production, just say there are wastage and evaporation in the material and in the liquid. And because of the cold weather, then this doesn't happen as quickly as in a hot weather. Okay, so winter production maybe produce less losses than summer production. This is just an example. Then the differences between expected loss and real loss could be the abnormal gains. Unexpected favorable outcomes would count as abnormal gains. This represents a situation where the process experiences less loss than the expected normal loss. Sometimes there are indicator of efficiency as well. So maybe manufacturer become more efficient, like producing the more amount of outputs using the original amount of materials. Maybe some machine improvement or labor talents in skills improvement. So that's another possibility. If it's abnormal gains, they're generally viewed as positive. So manufacturers might look at the process and identify where the abnormal gains are from. So how efficiently the process could be. So they may indicate efficient resource utilization and effective process management. They lead to decrease in the cost of production per unit. So potentially allowing for more competitive pricings or higher profit margin. However, it's also important for business to analyze the reasons behind the abnormal gains to ensure they are sustainable. They're not just a one-off event, and they can be sustained in future production, and not the result of overly conservative estimate or some of the accounting issues. So to identify the causes of the abnormal gain is quite essential for manufacturers. Another important term I need to know is called WIP in process related. So these are items that have been started but not yet finished. And in calculating the cost per unit, you have to consider the degree of completion of the WIP. So with this concept, there's an extended concept called equivalent units. Really is the unit in progress times the completion rate. So that's the formula of it. So just say the WIP. The WIP normally refers to the materials and components that have begun to the production into products, but they stuck in the middle of the process. And then they're still very important because if the machine continuously develop into a final stage, become a product. However, in the accounting period, there's something relates to a certain accounting period. If this expense and production output are not made or produced in this period of time, then according to accounting principle, they should be counted into next period's gain or profit. Then that's the reason of WIP being happening. In terms of in this situation, WIP can be they are like inventory. They are very important measurements of costing control as well as productivity measurements of the business. So it's a key component of inventory. They situated between raw materials, which means inventory that had not been used in production, and finished goods, which means inventory that has been completed and become something ready for sale. So the characteristics of WIP, they are in a transitional state. They are staying in the process, so not finished, started but not finished. And one is valuing the WIP. Evaluation of them can be quite complex, as it includes the cost of raw materials, labor, and overhead expenses incurred up to the point of the measurement. So remember, when you calculate direct labor, direct material, and overheads, you got, for example, an item or a cost center or a cost unit. But for the WIP, is adding complexity because for WIP, it's a process of producing quite a lot of units, but the units is not finished and become a WIP. Percentage of the raw materials, direct labor, overhead costs need to be proportionated. Sometimes it's not very good to have a very high level of WIP. That may indicate a bottleneck problem for manufacturers. You want them to continue to go from beginning to the end to make this process very smooth into becoming a product to be able to sell rather than stack all the materials half finished in the middle of the process. That can be bottleneck. Maybe they're waiting for some other things to come. Maybe they're waiting for the next process to begin. While too low levels of WIP can suggest underutilization of production capacity and supply chain issues as well. So this WIP is a very important concept in process calculating, as well as they would have implications to overall manufacturing management, cost control, efficiency management. With WIP, there is this equivalent units concept. This is calculated for each component of production cost, typically materials, labor, and overhead. Calculation consider the stage of the WIP inventory. So this equivalent units is associated with WIP, allowing for an accurate representation of production cost for both completed and incompleted unit. For calculating equivalent unit, this is the formula, but generally there are a few steps. So normally you have to identify the costs as well, including material, labor, and overhead, and then determine the percentage of completion percentage. So this can be an estimation, the percentage completion for each cost component for the units, and also understand how much proportion of the unit is still in the progress before it reaches the final outcome. And then we can calculate equivalent units when these two numbers are multiplied. If it's bottled juice, then all the drinks are being made until before it's coming into the bottle. They're not finished yet. For estimation, then you can say maybe if 80% finished, then you can get the unit of progress times the percentage the juice has been finished. You can get equivalent units. Okay, so these are another key concept about this is conversion costs. Conversion costs are the total of direct labor overhead. These are called conversion costs. So only the direct labor and the overhead. There's no materials in it. They are quite similar to the prime costs in the ABC costing. So all the full costing. So we looked into what the prime cost is in those costing methods. These two, labor cost and factor overheads, when they are combined, because it is the labor and overhead together that convert the raw material into the finished product. So to isolate the two items from materials, give the management some understanding how these supporting materials or overheads, including labor costs, could contribute to the direct production, because in the process costing, direct production comes from direct materials, slightly different from the job manufacturer. So just say if it's oil production, producing cooking oil, most of the time it's just oil, maybe from different sources, have some refinement come out as oil. So basically, there's no other materials. So how much raw oil materials put into the process, there will be similar level of amount of oil coming out. Then raw material take a really good proportion in the costs. But in relation to this and opposite to this, labor and overhead are not the same. In some of the manufacturing factories, overhead is very low. Maybe the whole factory operates 24 hours, 7 days. Only a couple of people doing the maintenance, not really directly involved in the manufacture. So labor cost is different. Can you have a look at this? Yeah, go ahead. Hello, Mohammed. Just have a look at this exercise. Hello, students. What a conversion cost is. Remember this one. So this was the conversion costs slide we have studied. So basically is the total labor cost plus factory overhead. Can you see what cost of goods sold?
Cost of materials or conversion for a specific department during production.
This actually is cost of sold good is called COG. So it's B to 2, okay, B to II. What about C, cost of production report? So this one is refers to where costs in a process cost system are reported before being applied to the product. It's called cost of production report. D, cost per equivalent unit. E is this one. It means cost of materials or conversion for a specific department during production. Equivalent unit of production is the total of direct labor, direct material, and manufacturing overhead. And F refers to this one. Detailed listing of the total cost of the product, including the value of work in progress. So G is quite easy. Can you answer G, please?
Oh, that's I, right?
Yeah, G is quite easy, which is this one. Okay, so basically total direct material and direct labor is prime cost. Finally, transferred out costs, which is this one, the only thing left. Product of the total cost per unit and the number of units completed and transferred during the time period. Okay, final two topics, which are about joint and byproduct. So these are something used in the process costing as well. Joint product normally refers to something in accounting concept. When dealing with production process, there are multiple output in common input and then common output. So joint products are two or more products of equal or significant value produced from the same raw materials or production process. They're not necessarily identifiable as separate products, but until a certain point in the production process is reached, which is known as the split off point. The costs incurred up to that split off point are joint cost and needed to be allocated among the joint products produced from the same process, same materials, same place, and they can't be distinguished at beginning, but they will be distinguished after the split off point. In terms of allocating cost, the cost incurred before the split off points are allocated to the joint products based on some experience or consistent analysis. And the common methods for allocating joint costs include physical measures such as weight or volume, or value-based measures such as the cost into market. And then byproducts. Byproducts, the name tells, is something extra produced in the process of the manufacturing. So different from joint products, byproducts typically have a relatively low value compared to the main products. So the production of byproducts may not be the prime objectives, but their sale can contribute to reduce the overall cost of the production process. The cost of making those things need to be identified and allocated, because byproducts have a lower value. They're not very significant as the real products. So the accounting treatment focusing on the key revenue from byproducts rather than the allocation of the cost. Several methods to be used. For example, sales method, cost reduction method. So these are some of the actual terms about process-based costing. To be able to identify these two products are quite important as well, similar to the normal losses or abnormal gains. So they are quite important in the costing process because they affect how costs are allocated and how much profits could be assessed and what are the values of inventory left in the storage or in the process. So, and if these items like byproducts or joint products are not managed properly, then they can lead to very inaccurate financial reporting and also potentially affect the profitability of the production. So to summarize, joint products are more than one outputs from a single manufacturing process, utilizing common inputs, and all the products' outputs are substantially equal in value and significance. In the meantime, byproducts are incidental products made in the manufacturing process, of which their value is substantially less than the main product. Here are some other examples. Can you have a quick look at those examples and see if you can identify what type of losses these are?
Okay, Chair.
Example 1 first. What kind of loss it is? Can you tell what kind of loss example 1 is? Students, this first one is a normal loss, expecting to produce 1,000 liter. If normal loss is 8%, normal loss would be 80 versus 920. That's normal because 1,000 minus 80 would be this number. Okay, so there's no actual losses, and expected 8% loss is within the expectation. What about the second loss? What do you think the second, is this normal loss or abnormal loss?
I think it's normal loss.
This is normal. This one is normal loss, okay? Because normal is expected loss. The second one with 100 liters output.
And then they produced 900, so
Yeah, so for 100 liter expectation with 8% loss, that will be 100.
oh, okay, it's not expected.
No expected. It should be 920, and then they end up 900. So if they reach 920, then that's normal. So there are 20 abnormal losses there, unexpected. We don't know what happens to these 20 liters. Should produce 920 liters, only produce 900. That's abnormal loss. So this is normal. This is abnormal. Example 3.
Is it abnormal?
Yeah, it's abnormal because normal is 920. This is 940. Is this abnormal gain or abnormal loss?
Oh, abnormal gain.
Yeah, very good. So this is 20 liters more than expected. Then it's abnormal gain. This is abnormal loss. This is normal loss. Okay, so these are the three illustration of what normal loss, abnormal loss, and abnormal gain refers to. To summarize, here are some of the key terms that need to be remembered. Abnormal loss, normal loss, abnormal gain, and work in progress. This is quite important. Scrap value. Sometimes the outcome of a loss can be sold for some values. It's like some joint products or byproducts. Things like this, they have some, for example, in the production of screws or screwdrivers, those kind of thing, they may be a loss, such as metal wastage. So this metal wastage and all the defect things can be sold. Then they are called scrap value. Okay, they need to be added in to the accounting process because there are some kind of gain. So in that case, they may be reduced losses. If it's normal losses, then because something can be sold, then the normal losses are actually reduced, then need to be taken into account of the costing. These are the information for today regarding process costing, but we will do some exercises, quiz, and then work on some of the quizzes. I give you the link here as well. Students, the link is here.
Thank you, Chair.
Okay. So next Wednesday, next week, 13th.
We're gonna have a formative assessment.
No, we have the summative assessment.
Oh,
okay.
Wait, it's not formative?
No, it's a summative. Next
Okay.
Wednesday. Students, next Wednesday is a summative. Tomorrow and next Monday, next Tuesday, we might do some reviews. So just help you get ready for the summative. What is a byproduct?
Is it the first one?
Okay. What is a joint product?
Third?
This one? No, this one. Okay. Hello, students. Do you know how to do this one?
Is it 9?
You have to find out this production unit portion because it says physical unit based. And then you can use different percentage to get the cost of a different portion. But in this, it's ask you using market value base, which is different from the first question. So in this one, you need to calculate the sales value, which is the market unit, times the sales price, and you get proportion of P and Q. This is the right answer. Byproduct is something actual produced, not very important, small quantity and small, lower in value. And next one. So a product is produced simultaneously, later split at the split point in full processes. So they are similar in the value. They're just slightly different. Maybe some go red color, some go the other color in a paint shop. But at the beginning, they are the same in the same process. Okay, they are not identical, but they are quite similar. See the red is how you calculate. Okay, per unit cost is the total amount, total cost divided by the proportion, the total units. Then you get the per unit. This applies to both P and Q because both P and Q have the same production units. So this one, because it uses market value, so you need to get market value proportion. So for P, market value in total, P and Q is 1,800,000. So 180,000 US dollar. P has a proportion. P's proportion is 80,000 divided by 180,000 and times the total output, total cost. The cost for P is calculated. And when the total cost for P is calculated divided by the unit, then it will get the unit cost. Okay, that and the Q will be the same. You need to calculate the proportion of Q using the market value and get the proportion of Q's proportion in terms of the costing. Q's unit price is not the same to P's unit price. Okay, that's the exercise.